Hi guys, so in this video we will be learning how to find multi-bagger stocks with the help of Screener and AI. So firstly we will be going to Screener. Now you need to log into Screener, so I have already logged in, and then click on screens and then create a new screens. So here you can write your own filters. So as we are looking for high growth stocks, so firstly we would be writing sales growth. We would be taking a minimum benchmark of 5 years. So sales growth of 5 years has to be greater than 15%, and profit growth for 5 years. Similarly, we will be taking the benchmark for profit also of 5 years. Also has to be minimum of 15%, because around 12% averagely Nifty gives you the return. That's why we would be looking for at least a 15% in profit as well. Now return on equity also has to be greater than 15. Now here comes a debt to equity ratio. So debt to equity ratio that we would be taking is less than 0.5, because we are looking for almost debt free companies. And market capitalization will be the last filter. So market capitalization, so now we'll be looking for a minimum of 10,000 crores market cap. So here are the filters that we have put, and just remember that after entering each and filter you need to write an and, so that all the filters will be taken into consideration. Now we will be running this query. So these are the results. So as we can see that there are 89 results that are found with the help of the filter that we have entered. So as these are consist of 4 pages, so we would be slightly updating our filters as well. So this market capitalization from 10,000, we would be making it 50,000, so that we can narrow our list of the companies. So now here are 24 results finally with the 50,000 crore market cap, and with the criteria that we have entered, with the sales growth a minimum of 15% over 5 years, and profit growth similarly 15%, return on equity also 15%, and debt to equity almost 0.5, which is completely a debt free company almost. So here are the results, the 24 companies. Now firstly would be now we would be going for ICSI AMC. Just we would be verifying that the filters that we have entered, are they accurate or not. So company is performing in the similar trend or not. So here are the details. So firstly, the one of the filters was our market cap, which was minimum of 50,000 crores. So it has already been covered. So they have a market cap of 1,63,083 crores. ICSI Prudential AMC, and then also here return on equity is also here, which is 85.8%, which is remarkable. Now here we can see also debt to equity ratio is also mentioned here, so it is 0.00. So also, just in case if the debt to equity ratio is not coming for you, what you can do is you can edit ratio and you can select whatever you want. So I have already selected debt to equity ratio here. So let's go to back, and this is the chart. This is 50-day moving average, and this is 200-day moving average. So they are performing well above 50 and 200-day moving averages. Now here are the pros and cons. So pros, the company is almost debt free as the criteria that we had entered. The company has delivered a good profit growth of 21.5% compounded annual growth rate over the 5 years, or the last 5 years. So here's one more criteria of our has been covered. So profit growth, we had entered a minimum of 15%. So ICSI are already giving out 21.5% CAGR. Now the company has a good return on equity of the last 3 years, return on equity of 83%, and company is also a healthy dividend payout. They are providing a healthy dividend payout of 58.6%. So these are the few cons that the working capital days have increased from 57 to 220 days, and the stock is trading of 39 times of its book value. Now here is a peer comparison. So we can see that it is slightly overvalued, because also the people are looking at the future growth prospect of the company. That's why the PE is relatively on the higher side. Now these are the quarterly results and profit and loss. Now if we go to the sales, here we can see the year-on-year sales growth, which is 18.13% and 7.72%. And now March 2024, there was tremendous of 32% increase in sales, and 32% here as well, and 15.82%. So remarkable. This it has also completed our criteria. It has met the criteria that we had entered. Now this is the balance sheet of the company. The equity capital has increased from 18 to 49 crores in 2026. And the reserves has also been increased, and borrowings, yeah, here what we can see is a completely debt-free company from March 2024, 25, 26, zero. And now total liabilities is on the increasing trend. Fixed assets, cross block, investments, other assets, trade visible. So all the data is mentioned here. Now we can see the cash flow from operating activities. As you can see, the profit from operation, there is a tremendous higher trend. They are growing every year. Now working capital items and cash flow from investing activities, you can find the details of the investing activities as well and financing activities as well. Now dividend paid, so it is a highly dividend paying company, which I like. So yeah, so this is a dividend paying company as well, and this is the ratios of the debt to days. Now promoters are holding 87.59%. Similarly, as of March 2026, they are also holding a similar percentage. So now we will be going to Claude. We will be analyzing it. We will be verifying this information with the help of AI. So what would you? We will go to Claude. So just sign into the Claude. I have already signed in. Now we'll be writing a prompt. So just a short note that before you write a prompt, always write graphically present, because Claude is very great in visualization. So which I like the most about Claude. So graphically present. We would be adding growth potential. Graphically present ICSAI potential AMC's growth potential, risks, financial strength, business model. I'll be writing at the first. So business model, also suggest the long-term perspective for a minimum of I would say 3 years, whether it is a good buy or not. State pros and cons, and what is it, a multi-bagger stock or not. So this is the prompt that we have entered. So what we can do is the data that we had analyzed in Screener, so we can cross verify it with the Claude. So here we go. It might take a little bit time. So these are the final results as Claude has provided. It is still working. So here's the one thing that I like about Claude is that it's extremely good with visualization, as you can clearly see. Okay. So firstly, they had given a key financial snapshot of financial year 26, which is net profit, which is 24% year-on-year growth. Equity share has grown by 14.2%, and it is second largest AMCs. Now there is a business model. As we had entered the prompt, they are also explained the business model as well, which is a revenue model, their distribution mode, their production breadth, that investors base shift, and their global ambition, and the growth potential tailwinds from 3 to 5 years, the Indian mutual fund presentation, and US asset under management, and the risk, what could go wrong. They have also entered that bear market scenario. Just a minute. Putting the market data over there. Yeah, so here's a bear market case, which is a bear market case scenario. The SEBI total expense ratio cuts and SEBI penalty settled. So these are the quality ratings, which is profitability and all, and these are the revenue and profit after tax trends. So these are the pros and cons as we had entered. So it is India's number one active mutual fund, AMC, run by Com. Asset light and debt free business. Return on equity of 82.8% is exceptional. Now, 3-year outlook scenario, bull case. India's asset under management crosses 80 lakh crore industry and maintains a 13 to 14% share of enorm. And bear market case in a global shutdown, market correction, or SEBI total expense ratio cut. Case study. The final verdict. So, is ICSI AMC a multi-bagger? Qualified, yes, but not in the classic 3 to 5x sense over 3 years. Because ICICI Prudential AMC is a high quality compounder, not a speculative multi-bagger. Think of it like HDFC Bank in 2000s. The business is exceptional, but the size and premium valuation limit explosive short-term upside. Over a 3-year horizon, expect a 12 to 18% CAGR, which outperforms FD and most large-cap stock, but won't 5x your money. For a 2 multi-bagger 3x, you need either a deep market correction, bringing the value of 28 to 32 PE before you buy, or 5 to 7-year holding horizon to let the arm. So here they have also given a final verdict, which is business model in pain terms, growth potential. They have also given an in detail explanation of all this. So this is how you can actively verify high growth stocks and even multi-bagger, and you can verify it with the help of an AI. Hope you like this video. Thank you.